My name is Nur Fatiha binti Safarizan. My matric number is 14D8019F1009.
My name is Natasha Diana binti Azmi. My matric number 14D8019F1005.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurdamia binti Saidin. I'm from the 83C. My matrix number is 14D8019F1029.
Operating activities. Operating activities is a section of a company's cash flow statement that explains the sources and use of cash from ongoing regular business activities in a given period. The amount of cash flow arising from operating activities is a key indicator of the extent to which the operations of the entity have generated sufficient cash flow to repay loans, maintain the operating capability of the entity, pay dividends, and make new investment without resources to external sources for financing. In other words, it reflects how much cash is generated from a company's product or service. Example of cash flow from operating activities are cash received from the sale of goods and the rendering of services, cash received from royalty, fees, commission and other revenue, cash payment to supplier for goods and services, cash payments to and on behalf of employees, cash receipt and cash payment of an insurance entity for premium and claims, annuity and other policy benefit, cash payments of refund of income taxes unless they can be specifically identified, financings and investment activities, cash receipts and payment from contract held for a dealing or trading purpose. Okay, this is the example cash flow. So, to forget the net cash from operating activities, we must cash flow from operating activities plus with cash inflow minus with cash outflow. We can get net cash from operating activities.
Investing activities associated with purchase and sales of non-current asset. This area lists all the cash used or provided by the purchase and sale of income producing asset. Examples: building and equipment, purchase or sales of investment or subsidiaries. Examples of cash flows arising from investing activities are A. Cash payments to acquire property, plant and equipment, intangibles and other long-term assets. These payments include those relating to capitalized development, cost and self-constructed property, plant and equipment. B. Cash receipts from sales of property, plant and equipment, intangible and long-term asset. C. Cash payments to acquire equity or debt instruments of other entities and interest in joint ventures other than payments for those instruments considered to be cash equivalents or those held for dealing or trading purpose. D. Cash receipts from sales of equity or debt instrument of other entities and interests in joint ventures other than receipt for those instruments considered to be cash equivalents and those held for dealing or trading purpose. E. Cash advance and loans made to other parties other than advance and loans made by a financial institution. F. Cash receipt from the repayment of advance and loans made to other parties other than advance and loans of a financial institution. H. Cash receipts from future contracts, forward contracts, option contracts and swap contracts, except when the contracts are held for dealing or trading purpose. G. Cash payments for future contracts, forward contracts, option contracts and swap contracts, except when the contracts are held for dealing or trading purpose or the payments are classified as financing activities.
Hello, today I want to explain to you about cash flow from financing activities. The financing activity in the cash flow statement focuses on how a firm raises capital and pays it back to investors through capital markets. This activity also includes paying cash dividend, adding or changing loan, or issuing and selling more stock. In addition to, the positive number on the cash flow statement indicates that the business has received cash. This boosts its asset level, while a negative figure indicates when the company has paid out capital, such as retiring or paying off long-term debt or making a dividend payment to shareholders. Cash flow from financing activities provide investors with insight into a company's financial strength and how well a company's capital structure is managed. Okay, next, example of cash flow arising from financing activities. It has two. First, positive cash flow, and second, negative cash flow. Okay, now, if you don't know what needs to be inside the cash inflow, remember this. A positive cash flow from financing activity may show the business intention of expansion and growth, with more money is flowing in than flowing out. A positive amount indicates an increase in business assets. For example, issue bonds, sale of treasury stock, loan from a financial institution, and last, cash from new stock issued. Then, for negative cash flow from financing activities, on the other hand, can signal improving liquidity position of the business and also provide information about its dividend policy. For example, first, payment of cash dividend to stockholder. Second, purchase of treasury stock. Third, repurchase of existing stock. Fourth, redemption of bond. And last, repayment of existing loans. Next, statement of cash flow. Now, I will explain to you how to calculate cash flow from financing activities. First, add cash inflow from the issue of debt or equity. Second, add all cash outflow from stock repurchase, dividend payment, and repayment of debt. And last, third, subtract the cash outflow from the inflow to arrive at the cash flow from financing activities for the period. And now, you can get net cash from financing activities. That's all.